Hey guys, this is Kunal from TradingSim. I'm here to do another trade recap from June the 20th on a ticker symbol BIDU. If you like what you see with our trading reviews, please subscribe to our YouTube channel. This is the best way to get updates anytime that we post a new video or trade recap out there. It's an easy way to stay up to date. But let me get right into the trade example. So from June 20th, which is the simulation date we're currently on, many of you will recall that there has been some chatter about Britain leaving the Eurozone. So there was a term out there called BREXIT. I'm sure many of you have heard of it. It introduced a lot of uncertainty into the market, and over the weekend, the odds of that event actually occurring were subsiding, and so the market was cheering it. The S&P futures started to take off. I think at one point it was up 30 handles over the weekend. And so, I apologize for those of you who are not familiar with the term handle. It's essentially equivalent to a point on the S&P futures. And so what happened was we had a large gap Monday morning. So let me just kick this simulation off. You can see here we closed it around 206.50. We opened almost at 209. So we had about a 23 handle move on the S&P on the open, and it accelerated a little bit further. Let me just move it a little bit quickly here. Right, so you guys kind of get the idea here what's going on, but the reason I wanted to put this trade example together is I thought it was important to cover an environment where you get a gigantic gap on the open, especially on an index. I mean, what does that tell you? That basically tells you that there is a significant amount of pent-up buying before the market opened, and when it did open, they gapped the stocks up significantly, by and large, right? So that's what the S&P 500 represents, 500 stocks, and so we had a big move on the S&P, and so what ends up happening in these scenarios is a lot of the juice in these stocks is eaten up on that gap, and so it becomes extremely difficult for day traders to trade this type of move, and in this type of scenario, you want to be careful in chasing the momentum that's going to be in these stocks. So if you're chasing a continuation move and you already have a massive gap, you kind of want to be wary of that. And so, I got to be honest with you, especially on a day like this, it was extremely difficult to find a trade. I only found one, and I wanted to walk you through that. So BIDU was the trade, BIDU. It's a Chinese internet stock, and basically, I've drawn a trend line here. I typically don't like taking these types of trades, to be quite honest with you. But I thought it was a good short-term scalping opportunity, and so I wanted to walk you through it. As many of you who have watched our videos know, that we don't like to trade stocks that are in these ranges. They get kind of sloppy. I like to see clean breaks of levels, and so I'm not seeing that necessarily in BIDU. However, I am seeing an opportunity because we had this pretty large wick on the 14th. This was a $10 reversal off the highs. If those aren't continued to the downside, and the expectation is that these stocks will go back and try to test those wicks, which is exactly what it did on the open here, right? It showed up on our hot list. It was up 9 points in the morning. It was almost up 10 at one point. And so let's just move to a 5-minute chart, and you can see it's actually punching through that resistance area that I drew earlier, and this is important because what I was watching for was a reversal on this move, just because I didn't think the S&P could continue up and go up 40 or 50 points. I thought that there would be a chance that the market would pull back, especially on a news-driven event like that, and it would come back and we will kind of see what happened at this level here. Lots of volume pouring in. It's very bullish. RSI is extended on the open, but that's not atypical when you have a large opening gap. And so let's just fast forward through this a little bit. Okay. So I'm going to just step through this. And so what we've seen is we've seen that major gap. It moved higher. Now what's should give you a sign of caution, not a good sign for this stock, is that we've broken through that resistance and we've come back down through it. Am I going to go short because I see that? No, I'm not. I'm going to wait for a setup. And so, that 9 EMA that's on this chart, and many of you who have watched the videos will know this as well, is these stocks tend to come back to the 9 EMA and bounce. The first attempt is typically going to be supported by day traders, momentum traders in the morning, and you're going to find some support there. Is it going to necessarily hold? We don't know until we see a break, but the expectation is that it could hold, and you want to look for a pattern where you see a bottom formation where you could potentially take a long. So let's just step through this. So now we're coming into that 9 EMA at around 168.5-ish, give or take. And so we hit it right there on a 5-minute chart, and it's trying to support it. So all of this looks good, and I'm going to move it to a 1-minute speed just to illustrate my point a little bit here. So what we're starting to see is, this stock is not pushing off that 9 EMA as I would have hoped or expected if I was going to go long on this stock. It's kind of messing around here, and it's kind of in the beginning stages of forming a sort of a bear flag, if you want to call it that. Right, so we're kind of on a short-term basis. I mean, this is like 30-40 minutes this is like 1, 2, 3, 6 bars. It's about 30 minutes of trading activity. And so we're starting to see this bear flag forming, and we're starting to see it forming at the 9 EMA. So, if it's not going to support it, it's going to break down through it, and that's what we're watching for. Let me also put up some potential areas of support, because we need to know where we're going. So we know we have about a 38% retracement at about 168. Let me just move this a little bit higher. So 168.32-ish, and then the next level down could potentially be 167. So if we break here, we're first going to be looking for a push through that last support, which is going to be right here. So we want to push through 168.5. So let's just see what would have happened here. I'm going to go short here on a break of that 160. Sorry, 168.5. We're going to take a short. That's going to confirm to us that this is a breakdown, and we're going to set the stop right above 169.5. So we'll take almost a point, little less than a point, so about a 0.5% risk if we break down through that level. So you can see we're still just trading within that channel. There's not much going on here. I'm going to just move a little bit quickly through this. Let's move it at 5 minutes per second. Let's see. Okay, so now we're starting to break down through the 9 EMA again, and we're breaking through that channel. So I'm fast forwarding by 5 minutes, but we would have taken that short right below this 168.52 level. So we had a big red bar through that area. We've broken through the 38% retracement, so we're going to be looking at 167 area, give or take, to take off half of this short. That's what we're going to do. We're not going to ask questions. We're going to be just looking to take it off there and book some profits. So let's just see how this thing continues. And again, now we've broken down through the 9 EMA, so we're going to look to the 9 EMA as a potential area of resistance where it would want to turn back down, which is kind of what we're doing here. 30 minutes have gone by roughly. We have another support level right here that's trying to hold at 167.89, and let's just see if we can break through that, and we did. So we're moving down, coming into that low, and let's just pull up the 1 minute. Let's see what's going on down here. So we see volume accelerating. Anytime we're coming down to a big support level and we see a decent increase in volume, you want to take note of that. That could be a washout, waiting to happen. And so that is exactly kind of what did happen here. It didn't quite hit that level to the nose, but when it came back up through the 9 EMA on the 1 minute chart, especially after hitting a very close to a big support level, we would have taken off half at that break. So again, keep in mind this is not a perfect science. There's an artistic sense that you must have. You got to have some instinct that can only be developed over time. Quite honestly, you're not just gonna learn that overnight. That's gonna come from years of practice. But I got to apologize for that message. This computer just won't stop giving me problems. But regardless, we would have wanted to get out of half of this position. We're going to let this thing run a little bit. Let's just take a look here. Right, we have one support level that was broken right around here. There's another support level. I'm going to just remove the Fibonacci for now so that we can see what these trend lines look like. And let's go back to the 5 minute chart. Okay, so we did have a decent reversal here, and let's just keep going through here and see what happens. So now what it looks like we're doing, and if you're drawing trend lines, this is why I don't really like these triangle patterns, but if you're into that, we saw this basically a pennant of some sort forming here. This is a trend line that was broken. It's not accelerating through this level, and really we want to keep an eye on, at this point, we want to keep an eye on 168.38 to see if that can hold the price. But we do have a break of the 9 EMA here. So we want to be careful, especially if we're starting to break through 168.38 again. I don't want to see that happening. So you see, at this point, we're still at 168.28. We haven't taken that level out. And now we're just going flatline. This is going to kind of kill you because you're just going to, just sit there and be waiting, just watching this thing go up and down. But that's just part of the game, right? So we still don't have a sign that tells us we need to get out of this position. 168.25 again, it's just failing at this area. And so if we trade this thing into the close, as long as there's no violation of our rules, we're just going to let it ride. And so this thing is just looking to keep moving lower right into the close. At this point, I'm going to be looking to get out just because I'm not going to be holding this short overnight. But I think you get the idea. I can tell you from actually trading this period of chop right here was extremely difficult to hold. And so if you guys are subscribers to TradingSim, I'd encourage you. I know you can't do this on every single simulation date, but I'd encourage you to actually replay this thing in normal speed, and it might take some time, but you do want to do that. There's an element of patience that you need to develop. I can sit here and fast forward through this all day long and get instant gratification, but the real learning comes from analyzing levels, right? Watching that these specific levels don't come out, and just gauging your emotions at these levels. Are you panicking? Do you want to get out? What does your instinct tell you? You need to develop that instinct. And so typically you want to see pattern of in this scenario lower highs and lower lows. And so you just have to continue to refine your instinct. That's one thing I would just tell you. And these types of choppy environments are going to test your patience. And so this is where you can start making mistakes. So this is why the simulator can be a great tool to help you flush some of that out and develop that instinct and develop that patience. But in any case, I hope that was a good lesson for you guys. And if you have any questions, email us at admin@tradingsim.com, and feel free. We have a 7-day free trial for the TradingSim market replay tool. And if you have any questions on that, just let us know as well.